Hey everyone, wish that you're doing good. Today I'm going to talk about 5 questions that you should really ask yourself before investing in the financial markets. It's my first video here in English, so I'm expecting some support from you guys. Subscribe, comments, like, it's gonna be a pleasure for me. And let's see you just after the break. Let's go! First question that you should ask yourself is, what type of investment should I do? This is a very important question because for each kind of investment there are some rules to respect. You have to say, okay, I'm doing this kind of investment, there are the rules that I have to respect, and if I ever change, well, there are the new rules that I have to respect. There is 2 types of investments. You have passive investments, so I'm talking about the classic one, like buying stocks, gold, commodities, bonds, or even cryptocurrencies and keeping them as long as possible. It's just a buy and hold process. It can be 5, 10, 15, 20 years. So it's a long-term investment. The second one is a short-term investment. So I'm talking about speculation, I'm talking about trading. And when you talk about trading, you talk about 3 types of traders. The scalper. The scalper is someone who's gonna take advantage of small market variations by placing orders of a very short duration. It can be seconds or even minutes. The second one is day trader. Day trader is someone who's gonna close the trades before the closing of the market session. So let's say that I consider that the market is bullish today. Well, I'm gonna wait for some buying signal, and if the market is going down, I'm gonna short the market. The last one is swing trader. Is a bit like day trader, but it's more about days, weeks, or even months. It's gonna be up to you to choose the type of investment which corresponds to your personality, to your personal situation. But I have to remind you some facts here, guys. There are a lot of research about trading and investing and all this stuff, but I'm gonna content myself with one research which was carried out by the SEC. They found the following thing: 70% of retail traders, 70% of retail traders lose their money in the first quarter. In the first quarter, and around 100% on average, 100% they lose their money in less than 12 months. It's just crazy. It's just crazy. I'm not saying that to discourage you or something like that, but what I'm trying to say here, guys, is today in 2022, it's so easy and so fucking simple to say that I'm trading and I'm a trader, you know, and it's so hard to be a consistent and profitable trader. If you don't work your ass off to get it, you're just wasting your time and your money. On the other hand, the investment side is, I call it Mr. Everyone because it's accessible for everyone. Everyone can invest, but not everyone can trade. The thing with investing is that it's so fucking boring. It's boring. And people are looking for some excitement, are looking for some hype. That's why they tend to overestimate the short-term investments and they underestimate the long-term investment. And that's the trap. That's exactly the trap. Second question that you should ask yourself is, how much am I ready to lose? How much am I ready to lose? The research of Kahneman and Tversky 1979 found the following thing: the dissatisfaction linked to a loss is way stronger than the pleasure provided by a profit. Let's say that if you lose, for example, $1,000, it's gonna be more painful for you than you winning $1,000. In fact, you have a feeling of frustration, which makes us really want to give up. I suppose that you are asking yourself how we can solve this psychological problem. So the idea is that you learn how to lose before you learn how to win. How we can do that? It's very simple. Always start small. Don't make the mistake that I made when I started. I bet all my savings on the stock market and I lost, of course. It was very hard for me to accept. It's very necessary to determine first the amount you are ready to lose. By doing so, your brain is conditioned with the loss of this capital. And when you are trading, you trade in a wise and a thoughtful way, and you know that you're paying attention to your decision-making process. And the most important thing is that you are not emotional. In fact, your state of mind should be stable. If you are risking more than you can allow yourself, for example, to lose, you become so emotional and your decisions aren't based on some facts, on some real facts that are based just on your emotions, on how you feel, and that's the beginning of the end. Third question that you should ask yourself is, what market should I trade? If you are a passive investor, you are maybe asking yourself, should I invest in the stocks, bonds, commodities, gold, or even cryptocurrencies? Well, the answer is invest in diversification. What I'm trying to say here is, instead of buying a Tesla or Apple stock, you should buy an ETF, exchange traded fund. It's quite simply a set of stocks, bonds, commodities, and so on that perfectly respects the principle of diversification. In terms of risk and returns, it's interesting to invest in ETFs than investing in a particular stock or a particular bond. So now, if you are a trader, the question is different. You have to determine the level of volatility which corresponds to your personality. I'm gonna take an example here, guys. Let's take the cryptocurrencies and bonds. As you can know, Bitcoin, for example, can do sometimes like 25% up or down in one single day. Bonds can never do that. So as you can understand, Bitcoin, for example, is so volatile. That's why you should ask yourself a question: where is your risk tolerance? Am I looking for some big profits here? Well, I'm gonna have to take more risks. Or I'm gonna just looking for some conservative profits, so I'm gonna take less risks. Fourth question that you should ask yourself is, what risk should I take? The risk is a very subjective, it depends on a lot of elements, but today I'm going to talk about only two elements. Age, which is a very determinant variable. I know some guys, and I have even some friends who are so fucking young and looking to stay in their comfort zone. Guys, if you are so young and you're staying in your comfort zone, you're just having a passport of fucking misery. Take some risks, do some shit, work your ass off to get it. Work your fucking ass off to get it. Now, if you're old, it's not the same. You can keep taking risks, but not the excessive ones. The second element is responsibility. It often goes with age. When we are young, we don't have too much responsibilities. It's different, for example, for a father who maybe have some kids to feed. He cannot allow himself to take excessive risks. That doesn't mean that the young should take crazy risks. No, wherever our age, wherever our level of responsibility, we should always take calculated risks. The last one is invest in yourself. Invest in yourself. A doctor should have a lot of studies and a lot of practice to be a doctor. Financial markets, especially trading, is one of the best and the hardest jobs in the world. You cannot just watch some videos and say that you are a trader or you are an investor. It's not possible. Do some training programs, invest in yourself, do some paper trading, some backtesting, invest your time before you invest your money. That's all for today, guys. I hope it was helpful for you. Don't hesitate to subscribe, comments, like, share with your friends. Thank you, and see you in the next video. Ciao!